Hi everybody, welcome back to our expressions statement of cash flows. Where we left off in the last video was preparing a statement of cash flows under the direct method for expressions. We completed the cash flows from operating activities section. Now we need to complete the investing activities and the financing activities sections. And I know that because I'm looking at the example that we're following for the format. Operating activities is always first, followed by the investing activities section, followed by the financing activities section, always in that order. But I'm a little baffled. What goes in the investing activities section? Well, if I remember correctly, we were looking at Exhibit 12.4 on page 455 of your textbook. And we're talking about the investing cash flow section. What we need are changes in long-term assets that resulted from either the payment or the receipt of cash. If it's a non-cash transaction or a transaction that's not fully in cash, we only use the cash portion. If it's a non-cash transaction, it doesn't get reported at all. So let's look at our balance sheet and see what's going on. Here's the balance sheet for expressions. Remember, the beginning balance sheet for this brand new company is 0 all the way down. And let's look at our long-term assets. Well, equipment is a plant asset, which is long-term. And the ending balance is $16,200. The beginning balance is 0. So obviously we acquired $16,200 of equipment. And the question is, did we pay cash for that or not? And you can't tell that from the balance sheet. So you have to go into your additional information and look to see if this increase in equipment came about as a result of purchasing equipment for cash. And if I look at this note B down here, it says during the month of August, expressions purchased equipment for $16,200 cash. So we paid $16,200 cash for the equipment. And that goes into our investing section. Cash paid for equipment, $16,200. And remember, if there's cash being paid out, you put it in negatives. And that's the only transaction that happened in our investing activities. So put a line under that and add that column up, and you have cash used by investing activities, $16,200. Now we need to do our financing activities section. And let's take a look at our worksheet, our exhibit. In the financing sections, we want changes in long-term liabilities and changes in equity, such as common stock and dividends, that were paid for with cash or cash was received because of those changes. So we're going to be looking at the balance sheet for the long-term liabilities and the equity section. And we're also going to look at dividends. In the balance sheet, we don't have any long-term debt at all. The only debt we have is current liability accounts payable, and we've already taken care of that. Common stock increased. It was 0, and it is currently $17,000. So we have an increase in common stock, and the question is, was that cash that we received? And the answer is Jasmine started the business by investing $17,000 cash in exchange for common stock. So the answer is yes. The company received $17,000 cash in exchange for common stock. So under our cash flow section, cash received from issuing common stock, $17,000. Now let's go take a look at dividends. First of all, I've given you the amount of dividends that were declared and paid. So we know that cash paid for dividends was $900 because I made it easy on you. The homework is not so easy. So let's take a look at how you could calculate that cash paid for dividends was $900. Retained earnings is calculated, if you remember from way back in chapter 2 and 3, by taking your beginning retained earnings, adding net income, and subtracting dividends. That's always the change in retained earnings. So we could do a quick calculation here. Beginning retained earnings of 0, because the beginning balance sheet had zeros all the way down. It's a brand new company. Beginning retained earnings of 0 plus net income of $960 minus what equals the ending retained earning balance of $60. That is obviously minus $900. So cash paid for dividends is $900. Even if I had not given you that number right there, you would have been able to calculate that cash paid for dividends was $900. So let's go over here. Cash paid for dividends. And remember, if cash is going out the door, it's in negatives. And let's then calculate net cash provided by operating activities. And I know that I need to use the word provided instead of used because obviously a lot more cash came in than was paid out for financing activities. Net cash provided by financing activities is $16,100. That's $17,000 of cash coming in because we sold some stock, minus $900 cash going out because we paid dividends. So now we need to calculate a net increase in cash. Money coming in minus money being paid out in all three of these activities. So plus, minus, plus. Did you calculate a net increase of cash of $16,100? I hope not, because that wasn't the right answer, was it? When I did my sum, it just for some reason just picked up this on my Excel formula. But 2430 minus 16,200 plus 16,100 is a net increase of cash of $2,330. Now the next thing we need to do is go to our comparative balance sheets and pick up the beginning cash balance from the prior balance sheet. This is the ending cash balance. What was the beginning cash balance? It was 0. So let's add that in there. Net increase in cash plus 0 beginning cash balance equals an ending cash balance of 2330. We're finished with our cash flow statement, but we're not finished with our work yet. The next thing we need to do is to compare the ending balance in cash off of our statement of cash flows with our ending balance sheet balance of cash to see if they're the same. And if they're not the same, then an error was made somewhere in your statement of cash flows. So let's go check it out. 2330 2330 ending balance of cash off the balance sheet. It's the same. That means that our statement of cash flows should be pretty accurate. So that is the completed statement of cash flows for expressions on the direct method. In our next video, we'll may be able to fit the entire preparation of cash flows for expressions in one video under the indirect method. We might have to split it up into 2 videos, we'll see. So that's all for this video. I'll see you next time.